I don't know about all of you, but looking at the past couple of days here in the S&P 500, it has been an absolute bloodbath to say the least. And if you're looking for ways to learn how to trade this type of market, then you have come to the right place. You have found Riz International. And I'd go ahead and appreciate it if you go ahead and down below, click that like button and hit subscribe. Become part of our subscriber base here on YouTube. And if you are not a member of Riz Elite, then highly recommend you mark your calendars for May the 4th. That is right, Star Wars Day. We are reopening access to Riz Elite. If you want to be a part of this community, then take part of this webinar live as well as everything else that is included in Elite membership, then I highly recommend you get on that. There will be a link down below where you can get access to that on May the 4th. Now, looking at the S&P 500 here, things were looking okay when we were starting the week, and then it all went downhill on Thursday, and then it just continued on Friday, and there's quite a lot of movement in the market. Let's see, how big was that move? Let's just calculate that, shall we? Right about there. Of course, the dog decides to eat right now. 5% in 2 days. That is quite a move on the S&P 500 to say the least. And a lot of fear right now. There's a lot of fear in the market. There's a lot of concern about supply chains. We've got lockdown in China. We've got war in Eastern Europe. We've got inflation. We've got everything you can possibly think of. And what do we have? We have a nice downtrend here in the market. The market is currently in a downtrend, and it has not broken out of it yet. Now, we were talking about this last week, these critical support levels on the S&P 500, and so far they have been absolute gold. We came and tested here the 4,500 level on Thursday, as well as a push up towards the 200 moving average and the 100 moving average. Straight up rejection off of those, and down we went afterwards. Quite a push. We blew through 4,400 in a day. 4,400 was breached on Thursday, and it just kept going on Friday. A complete sell-off, complete flush, and we're starting to get close to being oversold here. And speaking of things that are oversold, we are going to be seeing opportunities aplenty here in the market very, very soon. Things of staple nature like Google, oversold at this point. Semiconductors like AMD, pretty much oversold at this point. We're looking at massive consumer staples that are going to be oversold to levels that we have not seen since 2020, since the thing happened back then. I can't say it because the algorithm will kill us if I do, but you all know what I'm talking about, what happened in 2020 when we had that nice big sell-off in the market. Here, let's just go back and look at that big sell-off. Oh, there it is. That thing that happened in 2020. That's what I'm referring to. We haven't seen, and I know we're not back at that level right now, and holy cow, let's hope we don't get there anytime soon, but we have not seen a sell-off like that ever since, and we haven't seen things like Google be this oversold in quite some time. So it is something that we are going to be keeping an eye on. Make sure you're building those cash positions as quickly as you can, and be ready to deploy that capital, because I can promise you, just because the last couple days we've been quiet, we haven't been taking any positions to speak of, there's a reason for that, and it's pretty obvious why. We were not able to make a strong push through 45, and it rejected from there, and down she went. So a lot of people have been calling for this sort of thing. Of course, the concern about rate hikes is always there. We talked about what happens when, the Fed consistently raises rates. That big R word, recession starts getting thrown around, and it does often happen when you raise interest rates like that the economy cools off. And that's kind of the whole point of it. They want the economy to cool off to constrict the cash supply to combat inflation. This is how they did it before, but we have only had one rate hike so far this year, and we have at least 5 more, if I'm not mistaken. And they've pretty much said that there's no chance that this next one is not 50 basis points, otherwise known as 0.5%. So with that in mind, the market's kind of freaking out a little bit. So there's just a lot of downward pressure on the market right now, a lot of selling, a lot of fear and anxiety about everything going on overseas. And so we are keeping an eye on that. And yes, we have had this nice rejection. We're going to be looking for that bounce. When it does happen, be ready to go. But right now, it's not time to be jumping in positions right now. It's not time to be, buying SPY puts. It's not time to be doing wild, crazy stuff, trying to catch the knife at the bottom. That is the absolute worst thing you can do right now. Right now, you need to be patient, you need to wait, and you need to just take a chill pill. Just because we're not placing trades does not mean that we are not in the market. And I know this is something that a lot of people struggle with. They're like, well, if I'm not trading, if I'm not getting in and out, then I'm not really in the market. No, you are. As long as you are keeping an eye on things and you are monitoring your positions and managing your positions as best you can, then you are still trading. Just because we're not putting orders in does not mean that we are not trading. Sometimes the right thing to do is nothing at all. And this situation right now, it is time to wait. It's time to take it easy, take a deep breath, let the market do what it's going to do, let it go. And once it finds that bottom, be ready to go. And as members of Riz Elite, you're going to know exactly when that time is. So definitely just another quick reminder, if you're not a member and you're watching this on YouTube, be ready. May the 4th. May the 4th be with you. So let's keep going here. Let's take a look here at the breakdown of the S&P 500. And, honestly, not a lot has changed since last week except this big dip on everything because of everything that happened on Thursday and Friday. Utilities and energy still the only things that are positive currently on the market above the zero line. Everything else is below it. Real estate, healthcare, financials, tech. The S&P 500 itself, represented here by the SPY, currently down 10.8% since the beginning of the year. So, things are definitely moving towards the downside, and, perhaps this type of correction is needed, but I think it's a little bit more artificial based on everything going on. Of course, we started the year with inflation worries, gas price increases, and those things have only been exacerbated by the war in Ukraine. There is constant talk on the news. I'm sure that you are all paying attention to that, and I would recommend paying attention to it as in acceptable amounts. So don't spend your whole night doom scrolling, as I like to say. Make sure you're getting out there and enjoying life, but always keep an eye on things. And there is escalation going on as far as, threats being thrown around, aid packages going to different places, airplanes, heavy equipment being exchanged. There's a lot going on over there, and the market is spooked. Let's just put it that way. The N word has been thrown around, and it's not the racial one. I'm talking about the nuclear one. I hope and pray that it does not go that direction, but that word has been used, and people are all on edge. So the market is reacting in kind. You can see it right here. We're kind of seeing that here as well. Everything rolled over on Thursday and Friday. And this is one of those things why when it's time to not trade, it's time to not trade because you can't fight the market. You have to go with the market, with whichever direction it wants to go. So right now, the market seems to want to go down. So we are going to, behave accordingly. We will wait. We're not going to be getting willy-nilly into positions. We're going to be careful, calculated, and we're going to be ready to go. Some things that, may have their value derived from something else. One of those being oil here. So, of course, at the beginning of the conflict, oil spiked, and there has been a lot of talk about the EU, imposing an embargo on Russian oil and natural gas. Now, that has its own consequences to it as well. It's not merely just political. Now, there's a lot to going into that, and I have no doubt that Riz will give us his insight on the chat here fairly soon on what's going on in that area. But oil currently actually in a bit of a downtrend, to be honest with you. If you look at this, we are making lower highs. Come on. There we go. Here we go. I mean, we're making lower highs, but we are basing here off of this 93.75 area. This has served as a very strong support and resistance for us. Support now, resistance in the past. And nice double bottom here on this. So I'll be interested to see if this downtrend continues over the next couple days. Of course, we're going to be watching that. But if that news that the EU is going to embargo Russian oil and natural gas, there is only one way that the price of oil is going to be going, and it's going to be doing that. Now, I'm not saying that that's what is going to happen. It's my theory as to what will happen if those measures go through. There's a lot of question about that. A lot of it hinges on the elections going on in France as well. So, whether Le Pen or whether Macron wins, I am not French, and I do not pretend to be an expert in French politics, but there will be a lot hinging on that as far as those decisions. And of course, any type of further involvement from Europe in the conflict in Ukraine. Gold slightly came out of its channel, which it has done before in the past, and came right back into it. So we'll see here a couple times where gold was ornery, decided to just bust out of the channel, and then come right back in. It's happened 3 times now, actually more than that. 1, 2, 3, 4, 5, 6 times since 2020. It has done this. So we come out, and then we come back down in. And we come out, and we come back down in. And then we play nice for a while. And then we come out, and we come back down in. So, gold has really, because gold used to be considered a hedge against inflation, right? Everybody's like, okay, gold always holds its value. It has intrinsic value, things like that. And of course, when you're comparing gold to the US dollar, you think, okay, if inflation goes up, then the price of gold should go up because it's going to take more money, which has less value, to buy the same amount of gold. We're not seeing that right now. So there's been a detachment between gold and the inflation rate as of late, and that's why we have not laid a finger on it. We have not made any gold plays. We're not planning on making any gold plays because we still feel that gold is a bit overvalued here, and it's really not behaving the way that you would expect it to behave in an environment such as this. We keep it on here because, some people like it. It does kind of give us an idea of things that are going on, but for the most part, gold being somewhat uninspiring and almost following the market the last couple days, making a fairly nice downturn. Something that is not necessarily tied to the market is Bitcoin. Bitcoin has been having a lot of problems as of late. We just cannot bust out of this 40 area. This 40,000 area is just a magnet for Bitcoin right now, and I think it's a lot of trepidation as far as things that are going to happen in the world. What is going to happen in Eastern Europe? There's a lot of concern about that. And I think everybody's just kind of in a wait and see mentality right now. Trying to figure out, okay, what's going to happen? Is it going to go hot and heavy? Are we going to go more kinetic with NATO? Are we not? Is our cooler heads going to prevail? All good questions that we don't know the answer to. And anybody who says, this is what's going to happen, I'm going to throw the BS flag on them because no one knows what's going to happen. Even when I gave you my prediction for the price of oil, that's just a guess. And I'm making a hypothetical statement based on what I think will happen if a certain catalyst occurs. If that catalyst doesn't occur, then my hypothesis is blown. Bitcoin, I think, is a lot more emotionally traded, that's for sure. But again, I think everybody's just kind of in a wait-and-see mentality. We haven't seen the huge rundown like we did in the market. I mean, there was definitely a move down here on the 21st, the 22nd, and the 23rd, but not as much as we saw in the S&P 500. So, Bitcoin somewhat insulated from the market in general, though it has been following the market more closely as of late. We still keep an eye on it, but 40,000 seems to be a very critical area for Bitcoin as it's just hovering around here and it doesn't want to break out of it. We kind of did it down here after the big sell-off, after we made a new high at 69,000 giggity. We came back down here. We pushed below it for a little bit, and then we kind of came back up to it, and a big move, and then it kind of came back down and it came back up, and we're just bouncing around in this between this 40. What do you want to call it? You want to call it like 33,000 and 48 is pretty much where we're bouncing around right now on Bitcoin. So we're definitely keeping an eye on it. We don't have any positions in Bitcoin right now. We recommend that if you do, you be very careful with them and you take your profits when you have them. All right, one trade that we did take this week was UPS. we got in on this one. Let me check this so I can quote the numbers right. Now, of course, I'm just talking about positions that we are in. I'm not recommending that you take these. This is just for educational purposes only. But we got in UPS around 190 here, feeling really oversold here. Earnings coming up in a few days, going to be on the 26th. So a little bit of a a starter position here. Riz mentioned that in his alert that after this huge sell-off, we're consolidating. We're basically oversold at this point, and we're down a little bit on this. We got in at 190, so it's a little bit in the red, but nowhere near our stop loss at this point. The earnings catalyst, of course, is a big one, but again, guys, this is an incredibly solid blue chip company, not going anywhere, and we're not concerned about it. Anytime soon. We have no problem holding this long term is basically what I'm trying to tell you, if it goes sideways or even potentially adding to it. So, that kind of leads us into our Q&A time. That was the only position we took this week. And I want to go ahead and open it up to the chat. If you guys have questions, start typing them in. I did get a question sent to me via PM, so I want to go ahead and take that one. So this is an elite member. He says, hey, I have a question on how we should be managing our portfolios if we have several positions down in the double digits. I'm assuming you mean percentage-wise, because double digits in P&L is not that much. I have a longer-term horizon, but wonder if I should just get to 100% cash right now and wait until a new uptrend resumes. It isn't out of the question that some of these stocks could go lower. That's very true. The other issue is he said that he's investing through a TFSA, which is a retirement account that he can only put so much cash into at a time, as opposed to a normal brokerage account where you can just put in as much as you want. Some of these tax sheltered accounts like a TFSA or a Roth IRA here in the United States, you're only allowed to contribute so much. So he's like, it's hard for me to raise cash positions via just contributions. Would like some insights on how I would handle that. So, I mean, let's look at the big, elephant in the room. That would be Netflix getting absolutely slaughtered on earnings and their new subscriber numbers. And so I know we have a position in this currently, and got a bit hurt on this, to say the least. But it's one of those things. So the question is basically, should I just book the losses now and eat it and just hang on to cash and wait? And I would say if you are holding blue chip stocks, very solid companies, there is absolutely no reason why you need to do that. In these type of tax sheltered accounts, of course, somebody texts me right now. Okay, yeah, you can go away, buddy. When you're in these type of tax sheltered accounts, it's basically a post-tax basis, and everything that you gain, all of your profits are not taxable, which is really nice. But of course, to combat this, they limit how much you can contribute every year, because if you could just contribute as much as you wanted, everybody would use that. And, the powers that be like to get their tax money. So this is a little bit trickier question because you're in a tax-free account like that. And it's one of those things where, in my opinion, no. I would not be dumping all my positions and just hoarding cash and waiting for the moment. I would also not recommend averaging down. I know in the past that we have done that on some positions. And right now we are not in a market that is conducive for averaging down. And let me show you why. I told you earlier, don't fight the market. Well, this is what I'm talking about, okay? We can't fight this. It's going to go down. Everything was down. If you looked at the heat map on FinViz on Friday, it was all red. Everything was red. And so when you have events like this, I understand that you're sitting there looking at your account and all you're seeing is red. And this kind of gets more into the psychology of trading. So I think that's really kind of where this question is coming from. I get it. As a former day trader and, someone who has had to hold positions for quite some time, it can be incredibly difficult logging into your account every day and seeing that negative unrealized P&L. But make sure you pay attention to that word in the front. And that word in the front is unrealized. It means that you have not lost any money yet. It just means that your positions are down from where you got in. The truth of the matter is no one can tell where the top and the bottom is going to be. I said that earlier. I'll say it again, and I'll keep saying it until it sinks in, because we like to think that we can time the market, that we know exactly where the bottom is. Like, I'm going to be like, yeah, it's going to be exactly here at 4,200. It's going to go down there. It's going to tap it a couple times like here back in March, and then it's going to bounce, and we're totally going to make, we're making bags. We're going to take it to the bank, right? But the truth is, we could see a push lower. There are outside forces right now that are acting on the market, and there always are. There are always catalysts that are outside of our control, such as things going on in Eastern Europe. Crappy monetary policy that's leading to inflation, oil prices, embargoes, things like this that we have no control over and that have an effect on the market. If you have a longer time horizon like this member does, then my recommendation is do not sell your positions right now and eat the loss. You're not doing yourself any favors. You're just losing money. So long as you are in solid blue chip stocks, you have nothing to worry about. You may have to hold on to it for a while. You may have to bag hold it for a bit. We may have to fight through this season of life that we are going through right now, and we're just going to have to grit our teeth, grab on tight and strap in, and hang on for dear life as we go on this ride that is the stock market right now, because that's what it is. I mean, look, it looks like a freaking roller coaster, right? We had the part where you're getting in the car and they have the belts that are taking the metal belts that are taking, there's a chuk 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 chuk, and then there's a little dip, and then there's more chuk 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 chuk, and then we get to the top, and then everybody puts their hands up and they let go, and everybody starts screaming as the roller coaster goes down, and that's really where we're on right now. There's so much going on around the world. It's so incredibly difficult right now. This is why you haven't seen too many speculative plays out of us in a long time. This is why you've been seeing us play the big names. It's why we're not playing penny stock parabolic BS that's going to blow your account up. It's why we never touched GameStop or AMC or any other of that garbage, that pump and dump crap. And the reason is because you don't know if those stocks are going to come back. Stocks that are solid, like, Apple, which is not as oversold as otherwise, but man, look at that downturn on Apple. We look at like solid biotech stocks like Eli Lilly, who's getting absolutely hammered the past couple days. We can look at Merck. Merck's another solid one. Been on the run, starting to come down with the market. These ones haven't been oversold yet, but they'll get there, trust me. We can look at things like AMD, one of my personal favorites. Fantastic earnings results, everything's looked great, and it continues to sell off. Why? Because there are other forces acting on this more than just what you see in the financial balance sheet. But the thing is, if you have a longer term outlook on these things, I mean, look at that. Even, back here, you could have been thinking, oh my gosh, I went from, 30 to 17. We lost like half of the value, right? And then it went from like 17 all the way up to 150, 160. If you have this long-term outlook, now understand that it took quite some time to get there. That was from 2018 to 2022, or 2021, excuse me. But still, it made it there. If you have this long-term outlook, if you're in solid companies that make good products, that are doing good things and, are in the right industries and things like that, then you're not going to have a problem. The problem is when you get into things like, here we go. When we get into speculative bullshit like cannabis stocks and things like that, these are not what I would call blue chip stocks. Okay, these would be green chip stocks. 420 was this week, so I had to get that in there, guys. But things like this, I don't think this is ever coming back. I'll be honest with you. I don't think Aurora's coming back to the the days of 140. Or things of those lines, but I think they had a split, if I'm not mistaken. Yeah, they split, so it wasn't that high in the past. But you get what I'm trying to say. When you're in things, like AMD, sure, it looks bad right now, but it looked bad back here too. And if you had that long-term prospectus, that long-term outlook, you can beat the market because you're investing in solid companies. You're sometimes, our timing is wrong. I mean, that's just all there is to it. Sometimes you get in and you have this BS happen in the market like we did, and you have to hold longer than you do. The worst thing you can do in that situation is just dump it. I think that is the absolute worst thing you can do. I can understand why you want to do it, because you just want to see some green positions, and I get that. I totally get that, and I've been in that position before, and it sucks. But sometimes you just got to grab on for dear life, hold on, and ride it out. You got to batten down the hatches and ride out the storm, because if you don't, if you just start abandoning ship, then, well, you've lost your position at that point. You've taken the loss, you've accepted it, and now you're in the lifeboat instead of a bigger boat. So I, for one, would rather stick in the bigger boat unless I know that that boat is sinking, and right now I am not ready to say that this big boat that we know of as the stock market is ready to sink. I think we are in the storm right now, and I think the best thing that we can do is hang on tight, hold on to your positions, don't average down yet. If you're here in Elite with us, when we do average down on any positions, of course, we will notify you of that. But just hold on tight right now. Take it easy, relax, understand that this is just a phase that we're going through right now. It may be a long phase, but if you have that long-term outlook, you're going to be just fine. And so that would be how I would answer to that member. So my recommendation, do not sell your positions, even if you're taking a beating right now. Trust me, we're all taking a beating right now. If you are holding some of these things, and you can't predict something like Thursday and Friday. You just can't. Especially two huge down days like that. I was surprised on Friday. I was not expecting it to continue that hard down. Can we look at BLK? Sure, we can look at BLK. Why not? BlackRock. Oh, there's a lot of talk in several communities about this stock now, isn't there? Let's just see here. So we obviously have some support here right around this 600 area. BlackRock, of course, a huge asset management corporation. Several trillion assets under management, if I'm not mistaken. Let's see here. What do we got? Let's see more towards the downside. Yeah, about there, I'd say. For me personally, from an ethical standpoint, I would not touch this stock with a 10-foot pole. That's just me. I don't like what this company stands for, and I will do my best to leave my personal feelings for them at the door, as physically as I possibly can. Definitely hitting support here right around this 660 area, rolling over for sure with the market on Thursday and Friday, so that was giving it some downward pressure. We'll have to see if that continues, but obviously there's a lot of negative views of BlackRock right now and what they're doing. And I know that, if I'm not mistaken, several states have pulled their pension out of BlackRock funds. So I would be careful on this one. I'm not looking to get in this. Like I said, I would be careful around this 660 area as well. But if the market continues to go down, it doesn't give two farts about any technical support levels on any security. If the market rolls over hard again on Monday, then you can see this blowing through 660. I can promise you that. Yeah, I don't have a whole lot to say about them other than that. Dividends are nice, but man, this is an expensive one. But yeah, I wouldn't touch this one right now. Not at all. What's going on with them? Well, like I said, there's a lot of negative press about them in the market and things like that, as far as things that they're doing with ESG scores and buying up properties and things along those lines. So, I mean, obviously they're going down here, and let's see, this was started at about 12 November. Right about here. So almost where the market peaked out, and then it started to go down. So I'm not a huge fan of BlackRock, so it's way too expensive, honestly, for my account. And the way that it's behaving along with the market right now, I would not look to get in on that. Tom wants to know, is he able to I'm assuming you're talking about transferring your positions from Thinkorswim to IB. I believe that you can. I've not attempted that, and you would need to probably talk with TOS and IB if you were planning on doing that. I know it's typically easier just to transfer cash, but If I'm not mistaken, there is a way that you can transfer your positions. I would touch base with them. You're probably going to want to give them a call, honestly. Something like that, trying to use like an online chat is going to be not too helpful, especially those chat bots that do nothing. Like, what can we help you with today? Click on these options. Well, none of them are the options that I want. So yeah, transferring from one account to another, or from one broker to another, I should say, a little bit more tricky. I'm almost positive that you can, but if you can't, if it's too tricky, then what I would say is just hang tight in Thinkorswim. It's a very good program, or platform, I should say, and you should be good to go. If it's non-registered accounts, then it can be done. Okay, thank you for that, Yas. I appreciate that. And he's done it. Okay, there you go. So yes, the answer is you can. So I would touch base with them and see what's going on with that and how to handle it. This is the beauty of Elite, guys, is, we have other people in here who have done stuff that even I haven't done. And I know that that's hard to believe, but it is true. There are some things in this life that I have not done. It's good. This is the beauty of the community, in my opinion, and why Riz Elite is so important is because we're all looking out for each other. We're not here to one up somebody else. We want to help each other grow as traders and as investors, and to do that, we need to have this community, and that's the beautiful part of it. And like I said, May the 4th, guys, if you're not in, it's time. It is time to join, especially in a market like this. Now is the time when people's accounts blow up, and they blow up because they're doing stupid stuff. Freaking out and dumping all your positions or something like that is a good way to really hamstring your account, especially when you don't have to, when you just need to be patient. Because how many times have you gotten into a trade and you'd be like, oh, if I had just held on a little bit longer, if I had just had a little more patience, it would have worked out. I can tell you that from my experience in trading, that has happened multiple times. And by multiple times, I mean probably well over 100 times at this point. At least it feels that way. And that's really the key thing that I can tell you right now is just be patient. I understand it sucks when you see that unrealized P&L in the red. But you know what? If the market continues to go down like this, maybe it might be best just not to log into your brokerage account for a little while. Just let it go. Their stocks, your positions are still going to be there. You do not have to log in every day and look at it and make yourself depressed. Trust me, I've done that before. I know I was holding a couple of positions that were just getting absolutely hammered, and I would maybe log into my account like once a week. I would take a look at the charts like this, and I'd be like, oh, okay, we're not at my entry price yet. I'm just not going to open the brokerage account today. Because there are some things that it doesn't help, and I get it. You want to get in there and see like all these green positions and everything looking spectacular and Gucci, and you'll be buying your Bugatti here soon. But sometimes you just need to leave that account closed. Just let it be, let it work, let the trade work, and give it time. And patience is something that it takes a lot of work to develop patience in the market. My personal favorite joke is, it's the prayer. It's God grant me patience and give it to me right now. Of course, the joke being that you're not being patient, asking for patience. So, yeah, dad jokes, I know. But I'm a dad, what can I say? The thing with patience, you just have to force yourself into it. There's no easy way to become patient, especially in the market. But I think not looking at your account every day, analyzing it, freaking out if your position goes more in the red, things like that, if you are holding solid companies, then you should be fine. Now, if you're not holding solid companies, then that's another discussion that we could have. Of course, I do not know our members' positions, and I don't know your positions either, and nor should I. It's your own private information. But, if you're holding BS positions, then yeah, maybe you need to let those go. But if you're holding solid blue chip companies, you got nothing to worry about. Just be patient. Just let it go. Don't be looking at that P&L every day and getting more and more depressed. I've talked with several members who have that problem. And honestly, guys, the best thing to do is just like just check it. You can check your charts. Just memorize your tickers. Honestly, I'm usually in just like 2 or 3 positions at a time, so it's pretty easy for me to know what I'm in. I just go on my chart view here, and it's like, oh, let's say for example, let's say we're in Facebook, right? Because we've been holding that one for a while. Oh, okay, Facebook didn't make it back to my entry price yet. All right, well, I'm done with it. Move on from the day. Say we're in AMD. Okay, yeah, we haven't made it back there yet either. All right, we'll just take it easy. Yeah, I get it, Larice. It really, you can really get anxious when you have that, because you're sitting there looking at it and you're like, how far down can it go? Is it going to go to 0? No, it's not. Okay, listen, I people who truly blow up their accounts to 0 typically do it via leverage and playing penny stock bullshit. That's just the God's truth right there. And so even if you got into AMD at 140 and you're still holding, and you're almost $60 per share down right now, it's gonna be okay. It may take some time to get back there, but given the right market conditions, it can absolutely do it. So when we're in times like these, guys, I really advise staying out of your brokerage account unless you're going to enter or exit a trade. There's no need to just have it up on your screen, looking at it on your phone constantly, and one of those things, and just let it go. Just let it work. You got to understand, like, okay, maybe our entry was not perfect. Let it be. Your entry is your entry. Don't go constantly averaging down every time the market rolls over. Just let it work, and you'll be all right. Nice. Well done, Yas. That's great. And I get it. Your registers account are hurting, but, it's one of those things. Hang tight. That's the best thing we can do right now, is just hang tight, hold on, and be patient. Wait for greener skies. That's a good one. Bluer skies and greener pastures. More favorable winds for the market. But do not jump into positions right now. Don't try and using air quotes here, make up for your loss with another trade, because more often than not, that goes against you as well. Trust me, I'm speaking from experience here, both in day trading and swing trading. Don't revenge trade. Just let it go. The market doesn't care about your emotions. You need to be in control of your emotions. So to do that, sometimes the best thing to do is just not look. Just leave it be. Check your charts every once in a while. But if we're having a market like this, unless there's a reason for you to be checking your charts, you can even check your charts like every other day. You don't even have to check it every day. So just be aware. There's one thing you can do here in TradingView is set like alerts for prices. If there's a certain price that you want to get out on, you can just, let's say you were in, well, we can't buy SPX. Let's say AMD, easy one, right? Let's say you wanted to sell AMD here around 105. You would just add your alert here, and then just keep an eye when your alerts pop up and be like, oh, AMD got to 105. Let me get into my account and go ahead and sell it. Do things like that, guys. Make your life easier, not more difficult. We've got enough to deal with right now. We don't need to add to it. So just do those things, guys, and I think that'll help your life a lot right now. I understand how difficult it is. I understand the pain of seeing all that red in your account. Trust me, we are there with you because we are taking these positions as well. So you are not alone. We are standing tall with you, side to side, shoulder to shoulder at this point. So just take it easy, relax. We've got the rest of the weekend. If you're Orthodox, happy Easter for tomorrow. For the rest of Christianity, Easter was the day before. If you're not Orthodox nor Christian, well, then it's just another weekend for you. So I hope you have a great rest of your weekend. Try and take it easy. I know the weather has turned beautiful here in the Midwest. I'm going to be taking the puppers out for a walk here after we get off. But I wanted to thank everybody for coming out and always for the great questions, just being here. I hope that if nothing else, you leave a little bit happier. You take some time to just spend time with your family, spend time doing things that you like. Go do something the rest of this weekend that you enjoy. and make it a better weekend. You'll feel better about it, I promise. Thank you, everybody, for coming out. I always appreciate it. Guys, if you are watching this on YouTube, like I said, one last time, May the 4th, Elite Membership opening back up. Make sure you're on it. Click that like and subscribe button, and we will catch you on the next one.